Let's be honest, we all see it. Every single day, the same 10 stocks flash across our screens. The same talking heads on TV shout about them, driving their prices to frankly insane heights, and in the process, setting up a whole lot of everyday investors for a painful fall. The hype machine is powerful. It creates this intense fear of missing out, practically forcing you to buy high right before the smart money decides to cash out. But the investors who are actually building generational wealth, they aren't following the crowd. They are looking for the hidden champions, these incredibly profitable, rock-solid companies that Wall Street and the financial media have either completely forgotten about or haven't found yet. They are digging for treasure where nobody else is even bothering to look. In this video, I am going to show you 3 of these exact stocks. They are in totally different industries and come from all over the world, from the United States to Europe to Asia. But what they all have in common are shocking fundamentals, durable businesses, and growth potential that the market is just completely sleeping on right now. The first quiet candidate is a company modern tech literally couldn't run without, yet most people haven't heard of it. NXP Semiconductors, NXPI. When you hear chips, you probably think Nvidia or AMD, and sure, they get the headlines. But NXP doesn't make hype AI silicon, it makes the tiny, critical chips cars, banks, and factories rely on. Think vehicle safety systems, radar, car-to-car comms, in-car networks, or the secure chip in your phone and credit card that makes tap-to-pay safe. That's NXP, invisible but essential. They aren't in the flashy race for the most powerful AI chip, they are embedded in the essential tech we rely on every single day. So why is it a hidden stock? Because it's not a flashy consumer-facing brand. It's a classic picks and shovels play that gets completely drowned out by the media obsession with AI. While everyone chasing the AI gold rush, NXP is quietly selling the mission-critical tools that entire industries are built on. This lack of buzz has created a fantastic opportunity for us. Let's get to the profitable part. NXP has what investors call a wide economic moat. They have incredibly deep relationships with major automotive and industrial clients who design their products around NXP's chips. You can't just disrupt that overnight. It creates sticky, reliable stream of revenue. And despite some recent revenue dips from a general economic slowdown, analysts are overwhelmingly positive, with many rating the stock a strong buy. They have proven their resilience with a strong free cash flow, totaling over 1.1 billion in the first half of 2025 alone, which fuels both smart business moves and a healthy dividend. The real kicker here is the unstoppable march of technology. The shift to electric and autonomous vehicles means way more chips per car, a trend NXP is perfectly positioned for. The growth of the Internet of Things, 5G and industrial automation all demand NXP's specific skills. This isn't a short-term thing, it's a massive long-term structural tailwind. And while the stock has lagged the S&P 500 recently, analysts see major upside with some price targets, predicting a jump of over 25%. This is a chance to buy a quiet champion before the rest of market wakes up. Our second company is in a sector most growth investors find, well, boring. Real estate. But hold on, this isn't just any real estate company. Meet Healthpeak Properties, ticker symbol DOC. Now, you might see it listed on some platforms by its old ticker, PEAK, but they have recently merged and changed it. So, what does Healthpeak do? It's a real estate investment trust, or REIT, that owns the actual building at the heart of medical innovation. They are the landlords for two of the most important and fastest growing industries on the planet: life sciences and healthcare. They own a huge portfolio of outpatient medical affairs and, more importantly, cutting-edge laboratory buildings designed specifically for biotech and pharma companies. So, while other investors are trying to bet on which single biotech company will find the next miracle drug, HealthPeak takes a smarter approach. They own the real estate where all of those companies do their research. Calling it selling shovels isn't quite right. This is selling ultra expensive, highly specialized lab space. Climate control, clean rooms, millions in build out. You're not betting on one biotech hit, you're getting paid by the whole flow of research because every lab needs that space. Why is this opportunity hidden? Let's face it, specialized rates aren't exciting, they don't make for splashy headlines. Most people are chasing the next disruptive tech, not the company that owns the buildings where the tech is being born. This has pushed the stock price down, making it look incredibly cheap based on its price to funds from operations, which is the rate version of a PE ratio. Now, for the profitable part, HealthPeak's business model is built on stability. Their tenants aren't fly-by-night startups. They are major hospital systems, research universities, and big pharmaceutical companies. These tenants sign long-term leases, giving HealthPeak a predictable, growing river of cash. In the first quarter of 2025, their lab spaces renewed with a 5% rent increase, and their medical offices saw cash leasing spreads over 4%, showing they have real pricing power. The balance sheet is solid, lots of cash and liquid assets, and they are buying back stock. The classic signal management thinks shares are cheap. Add a big structural tailwind: demographics. An aging population and growing demand for healthcare and research means steady tenants and ongoing demand for specialized labs. HealthPeak is standing right in the path of these massive multi-decade trends. The market is focused on short-term noise, creating a huge disconnect between the stock price and the long-term value of its irreplaceable properties. Alright, quick pause. We have covered a quite cheap giant and the landlord for the entire medical field. If you are getting value out of finding stocks that aren't being hyped on every other channel, do me a favor and hit that subscribe button. It's the best way to support this kind of research and make sure you don't miss what's next. For our third and final stock, we are looking at a name you have definitely heard of, but one where the real opportunity is completely hidden in plain sight. I am talking about the Chinese technology titan, Alibaba, ticker BABA. Alibaba hidden? Funny to say because the name is famous. What's hidden isn't the brand, it's the profitable business streams and growth drivers the market keeps overlooking. But the true value, the raw profitability, and the future growth drivers are buried under years of negative headlines and geopolitical fear. Wall Street has basically written this company off, and that's exactly where the opportunity is. Most people boil Alibaba down to China Amazon, and that's way too simple. They run a massive cloud platform, logistics, fintech operations, and international projects. Its cloud intelligence group is the engine of China's entire digital economy, and its revenue from AI-related products has been growing at a double-digit and sometimes triple-digit pace. On top of that, they have a massive international e-commerce arm, a sprawling logistics network called K-Now, and a big stake in the fintech beast, Ant Group. The opportunity here is hidden by one thing: fear. The stock has been plummeted by worries about Chinese regulations and United States-China tensions. Investors are so focused on the headlines that they are completely ignoring the hard data. So, what does the data show? Let's talk profit. The company is refocusing. Doubling down on its most profitable units has already paid off. Margins jumped noticeably by the end of March 2025. Alibaba has a massive share buyback program, spending nearly 12 billion in fiscal 2025, and recently started paying a dividend. That's management screaming from the rooftops that they think their own stock is the best investment on the market. The catalyst for Alibaba is one-two punch. First, any good news on the regulatory or geopolitical front could cause the stock to reprice higher, fast, but you don't have to bank on that. The second, more powerful catalyst is already happening. The insane growth of its, again, cloud and AI businesses. As China's economy goes digital and embraces AI, Alibaba Cloud is set to be one of the biggest winners. While the market is pricing Alibaba for disaster, you have a chance to buy a dominant tech platform with multiply growth engines at a massive discount. So there you have it. Three incredibly profitable companies that the market is just not paying attention to. We have got NXP Semiconductors, the essential player, making the chips that run our world, trading at a discount because it isn't as flashy as it appears. We have Health Peak Properties, the boring but brilliant landlord to the future of medicine, paying you a high dividend to wait while it sits on some of the most valuable real estate on the planet. And Alibaba, a misunderstood giant. Headlines and regulatory fear hide the real story, improving profitability and strong cloud growth. Now it's your turn. Which of these stocks surprised you the most? Do you own any hidden gems that you think I should break down next? Let me know in the comments below. I read every comment, seriously. I look through them all and reply when I have got something useful to add. Thanks for watching and see you